Hello traders, Gary Wagner here. Just about 11:30 in Honolulu, 5:30 in New York. It is Monday, 28th day of January 2019, and this is the daily report for gold and silver. We are showing nice upside moves in both gold and silver. Platinum and palladium are trading lower. First to gold up about $4.90 at $13.03. And that, of course, is basis the February contract, which is in essence become cash. We did make a recommendation. We went long yesterday, but we went long in the April contract. And as you can see, April is trading at $13.0920. And we will talk about stop placement as well as our entry price and exit strategy when we pull up our technical studies. Silver up almost 0.5%, a 7-cent gain at $15.77. And as I said, platinum and palladium lower, $814.70. That's platinum. Palladium down 2%. That is being hit even harder. $1,293, down 26 dollars on the day, and now trading well below the price of gold. The equities were down across the board. And lastly, we did have a dollar index, which was in essence unchanged on the day. Traders, before we get to a couple of gold charts and, time permitting, a couple of silver charts, I did want to look at the dollar, because even though I put it in the unchanged column, in other words, the variance between the open and close is 0.04%. Today we traded to a much lower high as well as a much higher low. So traders, yesterday we did send out a special trade alert, and that was recommending that we go long the April 2019 contract of gold. At that time, we were looking at a price of about $13.07. And we currently have gold trading at $13.09, $13.0890, which represents this single candle right here. Now, I think that we're very, very close to real minor resistance. I see absolutely no reason that gold would have any issues running through 1313. And my initial target is going to be the 0.78% retracement, which is currently sitting at 1348. That is this up here. We currently have our stops at 1284.13, and in essence what that is just below these lows that came in on Friday. But I do expect there to be some solid support at roughly 1287 down to that point. We'll look to trail our stops if the trade A goes in our favor once it breaks above $1,300 per ounce. And traders, lastly, in terms of looking at April gold, I've converted our chart into a Henkin-Ashi chart. And of course, what that does is it tells us the strength of a particular trend. You can see that on this last rally here, we had solid green candles, all of them not having any kind of a lower wick. That's what's very important. But we had the final nice body size. Then we started to develop some lower wicks, which is simply saying that the market traded at or below the midpoint of the prior day. Then we saw the body size get extremely small. Then they went to red, stayed that way for 4 trading days. And then on Friday, we saw a real nice turnaround. Of course, $22 will do that. But look at the size of these Henkin charts now. That's showing us that the trend that's developing is extremely strong and could be sustained for quite some time. Traders, my recommendation, therefore, is obviously maintain your current long position at 1307 in April, and also maintain your stop at 1284.13. Traders, I do want to cover silver, which we haven't really covered in any kind of detail for a while, because what we saw was back at the end of last year, up until about the first week of January, we had tremendous body size. We had a quick pivot. Look at that red candle right here. There's our pivot. And then we had quite a few days, a lot more than gold, of the market trading lower. But what I noticed just the other day is the lows that came in, they came in just at a potential level of support, And let's go ahead and pull that up so it makes more sense. There we go. And what you can see quite easily is that over the last, call it 3 trading days, we have seen real support at 1527. That is the 0.78% retracement. We've had lows that have just kind of crossed under there, but for the first time since the beginning of this year, end of last year, we are actually seeing a spike where the current pricing has moved well above the 200-day moving average. Now, we still haven't had the 50-day cross above that, but the first thing that you want to see in any kind of market that's going to turn extremely bullish is to see a proper order, which means you would have the shortest on top, the 50-day, then the 100, and then on the bottom you would have the 200. That would take some much higher prices before that actually transpired. Currently, I believe that for traders that are going long silver, you want to keep your stop just under this 1527. I'm going to recommend 1522, and your target would be $16.50. Traders, to say that we're looking at a confluence of events is an understatement. We have issues here in the United States, and they continue to mount. Although we had a temporary fix to the partial shutdown on the government, it's only for 3 weeks, and our deficit continues to grow. Still, we see a trade war between China and the United States. We have Brexit, and now we have Venezuela. All of these combined could certainly be highly supportive of gold, and I believe that's exactly what we're going to see. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.